Hello, everyone. I hope that you guys had a wonderful weekend, and I hope that you have been enjoying everything that you have been learning thus far. So, today we will be doing a review of the market, of course, right? Which begins with what you already know, right? Us looking at Ford's factory. Also, I have been seeing, some of you guys tagging me under some stuff on Twitter, and, as you guys know, right, I, don't care for drama or clout or anything like that. If you guys even realize, I rarely even post on Twitter. Like, I believe that they haven't seen charts from me in quite some time, which is, something that I promised that I would do, going into this year, which I did promise from last year. Right. Anyways, with that being said, looking here, you can see that we had no news today, and tomorrow we have no news as well, right? So this is CPI week. We do have CPIR, a high impact news event on Wednesday. Thursday, the same. So, with that being said, and since there is no news on Friday, right, I am expecting to see the high low of the week around Wednesday or Thursday of this week, right? What does that mean whenever I say things like that? It means that there is a high probability, right? In my opinion, that, it might happen. It's not that it will happen. It's not that, it's sure to happen. Of course, it's more than likely going to happen, but, right, there's nothing that is sure, in the realm of trading, right? There's nothing that's 100%, right? There could be something that's 90, there could be something that's 80%, but there's nothing that is 100%, right? So yes, we're expecting movement on Wednesday and Thursday. During the New York session will be the times that will have the setups, if you're looking for one. Here on the screen, you guys can see that we have the index futures chart, right? Here, as usual, the S&P 500. Here, the NASDAQ, right? Okay, this, I was using that for something else. And here, the Dow, right? So you guys can see that, as we draw closer, and this is something that usually happens, right? As we draw closer to the end of this contract, what happens? We see a lot of, back and forth, a lot of range price action, right? And this is, completely normal, right? This is what usually happens, in the, the month prior to, or the 2 months that are, prior to the expiry of the contract, right? So, here, looking at these three assets, these highs are something that, are of importance to me, right? I'd like to see price, rally above these highs. Looking at the Dow now, which is something that I don't do a lot, right? So now we'll look into, more details. So here, you can see that we traded above this inverse fair value gap, right? And all of this happened when? Monday. Right, so Monday's price action, we traded above this gap, ended the day here. Here we traded above this gap, ended the day here. Here we traded above this gap, right? Way above this gap. Ended the day here. In my opinion, the next draw on liquidity would be, where I have labeled here. It's buy side liquidity, buy side liquidity, buy side liquidity, right? And, if you see, these highs right here, you guys already know that, who I am when it comes to, equal highs, right? I can't stand seeing them, right? So we'd like to see, some form of cracking correlation occur here, right? And then, have price being drawn, to these highs, but first, to this high, into this fair value gap, looking at the NASDAQ futures for the Dow, this high and this high right here. Which means what? That, you might see stocks going higher, right? If this is in fact correct, right? Due to the fact that, stocks will follow, whatever the futures contracts or the index futures contracts do, right? Whenever you see, right, price expand on Monday like this, right, it's usually a precursor to, the direction in which the most of the weekly range will be formed, right? So for example, here you see price expand on Monday, and it the same thing for, if this occurs during the Asian session, if it occurs during the first week of the month, right? So here we have price expand here. Now we're just focused on this, cycle, right? We're just focused on the weekly cycle. We don't care about the monthly cycle right now. Eventually, we will, mesh the two together, but now we're just talking about Monday, right? This is what happened today. Due to the fact that, this happened, what could you look for, right? Since most of the range here was formed here, right? We could expect price to, fall below the true week open and just continue higher here, right? Whenever you see moves like, whenever you see, for example, I'll just talk about it, right? Whenever you see the weekly range, the previous weekly range do something like this, then you have Monday do something like this, which is, go higher, while the previous weekly range was just, going lower. What does that mean? It's showing you a sign, right? Okay, what does that mean? We're going higher to go lower, right? That's the sequence. Higher sequence is saying lower, but here we're saying higher. So that just means what? Pullback. It's a pullback, right? Here, right, we have, more details. So here, this red shaded area right here for the S&P 500 is a daily fair value gap, right? So we had price fall within the daily fair value gap, right? Run below this low, trade higher and stop within this gap right here, this fair value gap right here. Do I think this is bearish? No, I do not think that this is bearish. Right? Remember, as I said, I believe that this is the drawn liquidity. And there's another reason why I believe that it's drawn liquidity, right? Why? Because we have this high and this high forming within a new week opening gap, right? So, as it's something that many of you may know, right? Price moves from new week opening gap to new week opening gap, right? And that is the case, even when you're comparing assets. So for example, here you have price reacting to a new week opening gap here for the Nasdaq, right? What else do you see? Here, we do not have a new week opening gap here that price is reacting to. But here we do have one. But yeah, here we don't have a higher time frame gap, but we do have a new week opening gap. Do you understand? So here we have a correlation between gaps, but the gaps are not the same, right? So this is actually high probability that this gap will hold and this new week opening gap will hold, right? It's as if you were combining them, and just for example, when you're looking at the Nasdaq, picture that this exact fair value gap is here, and when you're looking at the S&P 500, just picture that this exact fair value gap is right here. So we have them overlapping, through correlation. So we had price move higher whenever they overlapped with each other. Price move aggressively away from this week's new week opening gap, which is shaded in orange. And usually whenever you have price expand from the new week opening gap like this, then you can expect a big week, a large range week. Whenever price gravitates around a new week opening gap, just consolidates, then that's the time when you expect price to remain in a range bound condition, right? And someone said, didn't you just say you expect equal highs to get taken? Yes, I did. I don't know what you heard. I did not say anything about not expecting that to happen. So yes, here we have this new week opening gap. We have these equal highs, right? Forming within the new week opening gap, which makes it, a probable, highly probable draw on liquidity, right? And then here we have this high here and this high right here, which I would consider to be a draw on liquidity, after we see a cracking correlation. So what will usually happen as we get closer to, times, whereas, we should be expecting, the contracts to expire for, a particular asset class or, whatever you're looking at, we're going to see price action that is, pretty choppy. That usually happen, but, usually the first 2 weeks or so after, the new contract begins, then we will begin to see, clearer price action again. Like right here, you see this type of price action. We have this small candle just open like this. There's no retracements within the gap. It's just, right, just going higher and higher and higher. Right, like here, we have these, whipsaw kind of price action. Right? Here, there was no sequence SMT here, which would, allow us to, expect higher prices. Right? But there will be times, of course, right, when sequential SMT price will, rally, but it will not be something that's, quote unquote, permanent, right? Well, no rally is permanent, but it will be short lived. That's what I'm trying to say, right? And this is usually, what I'm talking about. As whenever you have a low formed within a gap, and meshed in with a new week opening gap, right? Or you have a high formed within a new week opening gap, like here, here, here. Price usually gravitates to those. And then here you see we have this very thin new week opening gap right here, right? With this dull gray color, that's a new week opening gap. It's very thin, but it is a new week opening gap. Right? Usually price will gravitate to these levels, right? So there's a lot of liquidity in between this high and this new week opening gap right here. Here you can see that here we have a old monthly low that I've marked out, which is at 99.099 right here for the US dollar index, right? You can look at your chart, look at the monthly time frame, right, to see which low this is. Here we have this old monthly high here for the Euro USD, right? And here we have price trading above this old monthly high for the Great British Pound, right? So here, yes, we have a cracking correlation here, higher time frame cracking correlation, which is indicating what? That we should see a stoppage of price from, going, higher, or just a pause, right? So it doesn't matter, right? Here, sells will be found easier due to the fact that the higher time frame is suggesting that, right? However, here you can see that this is symmetrical, so this is not a cracking correlation, right? Price did not run above this high here. Price did not run above this high here, and price did not run below this low right here. Also, we have no precision swing points, right? Here, right, we have a cracking correlation right here, whereas we have price running below this low here, price failed to run below this low here, price failed to run above this high. Whenever you see, right, you have a higher time frame cracking correlation, then you have a lower time frame cracking correlation. This becomes low probability, right? This lower time frame cracking correlation is low probability, right? The higher time frame, immediate higher time frame, since it is, saying that, we can expect more downside for the pound or the euro, or more upside for the dollar, right? This is a low probability. Hence, here, this is just consolidation. What does that mean? Wait for, something to, or you wait for this to be two-stage, right? But when you're looking at, price running above an old monthly high, right, you want to see the, same occur for price to change direction, right? So here we have buy side liquidity here, sell side liquidity here. This is not something that I would consider to be high probability, right? If we have a high impact news event push price below this low, then we have a cracking correlation here, right? We could expect just a retracement, but the rules, which we all know, is right. The basic rules: do not buy in discount. Here, this is discount for the US dollar. Here, we're in premium for the euro. Here, we're in premium for the British pound, right? So the clearest assets right now, which ones are they? I'd say that even Bitcoin, is more clear than the forex market. And this usually changes, right? You have clarity in the index futures. It will shift to crypto for a short time. Then it shifts to forex, right? But it's a rare occurrence. It does happen when you have clarity among, all assets, right? Because how it works is that, and you will see this, that whenever you have, for example, the US dollar staying within a tight range, right? At those times, the S&P 500, the NASDAQ, they move, right? And at times, whenever you see the NASDAQ and the S&P 500 within a tight range, what happens? The US dollar moves aggressively, the euro moves aggressively, and the British pound moves aggressively. Here for Bitcoin, you can see that I have here, right? Buy side liquidity, buy side liquidity. I believe that there's a lot of liquidity here. Ultimately, am I, expecting 100K or anything like that? No. Right? This is just the short term, my perspective of price. Right? We could expect a, short squeeze above this high. Right? Is it the previous price action? No. Is price trading within a gap? No. First of all, price have not been respecting any gaps. Right? Since around March or so. Right here, price traded above this gap. There was a gap here. Price traded right through. There's a gap here. Price traded right through it. Right here, we had a gap. Price reacted, went here, and just left these equal highs. And this is the reason why I believe that price, will more than likely be drawn to that for the short term. And if, this is correct, then it would give, the stock market a reason to, rally a bit, since we have had that sell off, over the past week. I hope that you guys found this useful. We'll be back Wednesday at the same time, right? And, I believe some people have been, asking me when we're going to have Saturday lives back, right? Hopefully the first week of next month, right? So currently I'm wrapping up everything, contracts with the company that I, work for, right? It's too tedious, right? Barely get any sleep. So I'm just going to cut that off completely and just have all of my focus here, right? So that's the goal. And, just moving right now, building my trading office over, right? And stuff like that, shipped off a bunch of stuff. And yeah, everything is going according to plans. We'll be delaying the next, intake, and it might be my last, to be honest, right? And the reason why I believe that I should do that, or the next intake, is due to the fact that I already promised everyone. So yeah, I'm more than likely, right? Soon it will just be us, here, and no one else. Anyways, I hope that you found this useful. And we'll be back, as I said, Wednesday at 6 p.m. Eastern Standard Time.